Hey everyone, I'm going to bring you one growth stock in this video that's down 88% off the high that I think makes an excellent investment. Now, this company is not without risk, and I'll share with you just a couple of the risks facing this company, but I'll also share with you all of the reasons why I think it's an excellent buy, even accounting for these risks. So let's jump right in. Let's see what the company is and why I like it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the company I'll be talking about in this video is Snap. Snap has seen its stock price fall 87.6% off the high, and I think it makes an excellent investment. In fact, I have Snap rated as one of my top 10 growth stocks and also one of my top 25 stocks to buy. And I last updated this recommendation on March 31st, and I'm again reiterating this recommendation as I've looked into the company recently, and I'm updating and reiterating this recommendation as a top stock to buy. Now, one of the reasons why I like Snap is because of the company's solid revenue growth in combination with cash flow expansion. So let's touch on the revenue growth first. It jumped up to 4.606 billion in the most recent trailing 12-month period. That's up more than 3 times of the 1.5 billion it generated in 2019. Now you can see revenue growth has decreased or diminished of late, and that's one of the risks which I'll also touch on right now. One of the bigger challenges facing Snap is changes that Apple implemented to its privacy policy that makes it more difficult for companies like Snap to collect user data, which then makes it harder for Snap to sell targeted advertising, which marketers are willing to pay higher prices for. Why is that the case? Well, would you want to sell advertising to a vegetarian living in Miami, Florida, if you owned a steak restaurant in Los Angeles, California? No, right? That would be wasted advertising. That vegetarian in Miami, Florida is highly unlikely to ever become a customer in your Los Angeles, California steak restaurant. So you don't want to show that person advertising. So you want to get user data so that you can target advertising to people that are likely customers. And so with more data collected, Snap can better target audiences, which is better for selling to marketers. And that's been under pressure because of the changes that Apple implemented to its privacy policy late in 2021. And so you've seen that impact Snap. Now, other social media providers have started to recover from that. Snap is a little bit behind. Meta Platforms in particular has done a good job adjusting and finding ways to come out of that and find new ways to get user data. Pinterest used to allow users to join the app without putting in an email and without putting in your birth date and all of that stuff. So now Pinterest started asking users to put more information in to provide them to volunteer that information instead of Pinterest going and trying to collect that information without the user knowing that Pinterest is looking for that. So Snap has yet to find effective ways to get more information from its users. I'm relatively confident that it'll be able to do that. These social media companies have options in how they can get users to reveal more information about themselves. And I think Snap will be able to do that eventually, given that it's been able to grow to such a scale and generate this much engagement from its users. I think I'm reasonably confident that it'll be able to achieve that. Now, I also said I'll talk about the cash flow, and you can see the cash flow from operations rising meaningfully from negative 30% in 2019 all the way up to 5.35%. Snap generating increasing cash flow from operations. It's focused more on the core business since Apple's privacy policy changes made it more important, more critical for Snap to really focus on the business, and they can't be sloppy anymore because their business is under pressure, and they've made significant improvements in that regard. They've made some cost-cutting efforts, and the cost-cutting efforts should be positive once they figure out how to increase or reaccelerate revenue growth. The cash flow should be even stronger going forward, given those cost-cutting efforts they made. Now, I highlighted their revenue, $4.6 billion in the trailing 12-month period. That still leaves them at a tiny fraction of the overall advertising market. One of the other reasons why I like Snap stock is because the industry that it's operating in is massive. The total addressable market for advertising is forecasted to reach $1.1 trillion in 2024, according to Statista. $1.1 trillion market that's growing. And on top of that, the trend is working in its favor. In the advertising market, 78.55% of total ad spending will come from digital sources in 2029. So more and more advertisers are shifting their budgets to digital sources like Snap, and they're taking those budgets away from legacy sources like newspapers, print magazines, print newspapers, billboards, radio advertising, areas where investors or marketers cannot generate a good, precise measurement of the advertising spending. How many people listen to your radio advertisement? Who knows? How many people saw your print advertisement in the Los Angeles Times? Who knows? Of those people that saw your advertisement in the Los Angeles Times, how many of those made a purchase? Who knows, right? You can estimate those by triangulating some data, like looking at how many subscribers the Los Angeles Times has versus how many people read this section versus how much your sales increased from the Los Angeles region during a certain time period. But, now you're getting at vague estimates of viewership and purchase. Whereas if you invest in advertising on Snap, you can precisely measure how many people clicked that advertisement and made a purchase. And so you can get a measurement of your return on investment. That allows you to calibrate your investments and determine what your return on investment is and how much you're willing to spend. And so marketers are increasingly favoring that medium for advertising. And then on top of that, of course, people are spending more time on digital sources like apps and our phones, more so than reading print newspapers and print magazines. So all of that is working in Snap's favor. And I like that prospect. I like that tailwind. Now, Snap's balance sheet is okay. It's not great. It has $3.75 billion in long-term debt and $3.5 billion in cash and short-term investments. It's a neutral balance sheet. It's not great. It's not bad. Neutral. Roughly the same amount of cash as debt. And the last reason why I'll highlight I think Snap is an excellent investment is the valuation. It's trading at a forward price to earnings of 27.5, which is a relatively cheap valuation for a company with these prospects. Growing cash flow from operations, a total addressable market in excess of $1 trillion that's increasing, that has a secular tailwind within the industry that's working in Snap's favor, and it's demonstrated revenue. What's more, the analyst on Wall Street expects Snap to increase their earnings per share by 65% over the next 5 years each year, on average 65% each year. And you're paying a forward PE ratio of 27 for the company. So those are all good reasons why Snap is an excellent investment, even though it has risks, namely the headwinds I mentioned from Apple's privacy policy. Also, Snap finding it difficult to grow users domestically from the US, and that's the highest value consumers it can attract. So there are reasons why the stock price is down, but I think the selling is overdone. And I think at current valuations, Snap is a top 10 growth stock to buy and a top 25 overall stock to buy for me in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.